Okay, let's dive in. Imagine a world, maybe not too far off, where you don't carry cash anymore. Everything's digital. Every coffee, every payment, it all leaves a digital footprint.
And right now, there's this huge battle shaping up behind the scenes. It's all about who controls that digital future of money.
Exactly. And this deep dive is really for you, listening now, to get a handle on what this means, because it will affect your finances.
We're basically looking at two main camps, right? You've got governments pushing for central bank digital currencies, CBDCs,
Uh-huh.
and then you have the decentralized world, things like Bitcoin, offering a totally different model.
And it's moving fast. I mean, you said over 130 countries are exploring CBDCs.
That's right, more than 130. China's already got its digital yuan out there in trials. The EU, they're talking about a digital euro, maybe around 2025.
And the U.S. Fed is involved too, testing things out.
Yep, the Federal Reserve is definitely experimenting, so this isn't just theory anymore.
Okay, so let's break down CBDCs. What's the key thing people need to grasp? It sounds like it really boils down to control, doesn't it?
Absolutely. Think of it like this. A CBDC isn't money in your normal bank account. It's a direct liability of the central bank itself, like digital cash, but issued by the state.
And the potential issue there for, financial freedom.
Well, the concern is the level of control it could give governments. We're talking possibilities like easily freezing funds
Wow.
or implementing negative interest rates directly on your holdings, maybe even, and this is a big one, programming the money.
Programming it. What do you mean?
Meaning setting rules on how it can be spent. Like maybe these specific digital dollars can only be used for groceries or, I don't know, specific approved
You're
vendors.
right. And the argument for it is always convenience efficiency.
Sure, it's often framed that way. Easier payments, tracking finances. But you have to ask, is a major goal also to phase out physical cash? Because cash is anonymous, it's harder to control centrally.
Okay, so that's the centralized vision. But you mentioned Bitcoin and crypto pushing back. How does that work?
Exactly. Bitcoin is, well, fundamentally different because it's decentralized. It runs on blockchain technology.
Meaning no single boss.
No government, no company, no central authority controls the network. That makes it incredibly resistant to censorship. Someone can't just decide to shut down your Bitcoin transaction.
Which is probably why some governments seem a bit wary of it.
Definitely. You see reactions. China, for instance, banned crypto transactions back in 2021.
Hmm.
And in places like the US, you're seeing more focus on KYC, know your customer rules, basically trying to link crypto wallets back to real-world identities, reduce the anonymity.
So within crypto itself, there's this thing called DeFi, decentralized finance. What's that about? Is that like the next level?
You could see it that way. If CBDCs are about central control, DeFi is kind of the crypto escape hatch. It's building a parallel financial system on the blockchain.
So doing bank-like things without the bank.
Pretty much. You can lend your crypto, borrow against it, often earn interest rates that, frankly, you won't find in a traditional savings account. Sometimes, potentially quite high percentages.
Interesting.
And there are also tools within DeFi, like privacy coins, designed specifically to make transactions harder to trace, even for, say, tax authorities.
So when you strip it all back, this isn't just about digital payments versus coins. It's about who owns and controls your wealth, isn't it?
That's the absolute core of it. Will you genuinely own your assets in the future, or will you be, in effect, sort of renting access to your money within a system controlled by the state?
That's a big question. Okay, so people listening, understanding this,
Yeah.
what can they actually do now to prepare? What are the practical steps?
Right, actionable stuff. First, maybe consider diversifying a small slice of your portfolio into crypto. Even just 1%, maybe up to 5%, and something like Bitcoin could be a hedge.
A hedge against that centralized control we talked about.
Potentially, yes. Second, start learning about DeFi. You don't have to put lots of money in, but understand how platforms like Uniswap for trading or Aave for lending and borrowing work. See what's possible outside the old system.
Okay, diversify, learn DeFi. What's number 3?
Stay informed. Specifically, keep an eye on CBDC developments in your own country. Listen for phrases like pilot program,
Why pilot program?
because that's often the first public step. If a pilot starts, it suggests things are getting serious, and it could be a sign that more direct controls on money might be coming down the line.
Got it. So it really feels like the next, say, 5 years are going to be incredibly important in reshaping money.
Absolutely critical. The landscape is shifting fast.
And the choice for listeners is, do you just watch it happen from the sidelines? Or do you try to understand it, maybe even participate in what comes next, whether that's more centralized or decentralized?
Exactly. And maybe a final thought to leave people with. If we do move towards a heavily centralized digital money system, what steps, what knowledge do you need right now to make sure you still have some level of financial autonomy down the road? That's something worth really thinking about.